Welcome to Talk Tickers. Today we're diving into Monster Beverage's Q3 2025 earnings call. And this one's interesting, folks. It's a classic case of a company delivering the goods, but the market, well, it seemed to want something more.
So, right off the bat, Monster came out swinging. They absolutely crushed their non-GAAP EPS estimates, beating them by a solid 8 cents. A really powerful quarter at first glance.
But here's the kicker. You'd expect the stock to pop, right? Nope. The market's reaction was, well, pretty lukewarm. The stock actually ticked down over 2% in after hours, and that's a classic sign that the headline numbers just don't tell the whole story. So what's going on here? How do you get a stellar quarter and a skeptical market at the same time? Let's dig in and unpack this whole thing. Okay, so first up, let's just look at those headline numbers because, on paper, they look fantastic. Really strong across the board. I mean, just look at this. It's a clean beat on both revenue and earnings. Revenue was up almost 17% to $2.2 billion, and non-GAAP EPS, that surged over 36%. And what's really impressive is that gross margin expanded by 250 basis points. That's a huge deal. It shows they're running the business incredibly efficiently. So where did all this growth come from? Well, if we break it down, you can see the powerhouses, no surprise, their core Monster Energy drinks. That segment was up almost 18%. Strategic brands did well too. But, and there's always a but, isn't there? That much smaller alcohol segment is still a real drag on the business, down 17%. And check this out. This is the international story. For the first time, sales outside the US hit a record 43% of total revenue. That is a huge milestone. It just goes to show you how powerful their global distribution is, especially with that Coca-Cola partnership really paying off. Okay, so let's be clear about this. The fundamental business, it's firing on all cylinders. This wasn't some kind of fluke or a one-off good quarter. And management basically laid out their playbook on the call. It's classic, but man, is it effective. They're using their pricing power, they fine-tuned their supply chain. That's where those great margins came from. Plus, their sugar-free Ultra line is still a massive growth engine. And that international story we just talked about, it's picking up speed. All right, so let's shift gears and look ahead, because this is exactly where that market hesitation, that little dip in the stock seems to be coming from. So on the earnings call, management sounded super confident about their product pipeline for 2026. But, and this is the big one for investors, they didn't give any formal hard number guidance for the next year. And you know how Wall Street is. In this kind of market, uncertainty is a killer. It just doesn't get rewarded.
And the thing is, this pipeline isn't just vague promises. It's concrete stuff. They're launching FLRT, a new brand aimed at women, late in Q1. Then in Q2, they've got Storm Energy, which is their play for the wellness drink crowd. On top of that, 2 special limited-time drinks for America's 250th year. It's a really clear strategy to branch out and grab new customers.
Okay, so let's put it all together. You've got strong execution, you've got amazing international growth, but you've also got this cloud of uncertainty from the market. So here's our official take at Talk Tickers heading into the next quarter.
We're going to go ahead and initiate coverage with a market perform rating. So what does that mean to us? Basically, we expect the stock to perform right in line with the S&P 500. The fundamentals? They're rock solid, no doubt. But the current valuation, it feels like it's already priced in all the good news for the near future.
Yeah, this rating really is all about balance. It's like a tug-of-war, right? On one side, you have this absolutely exceptional execution. And on the other, you have these lingering questions about what's next.
And this really lays out the two sides of the coin perfectly. The bull case is simple. This is a dominant brand in a growing market, their international growth is a proven winner, they're rebuilding margins, and they have a clear innovation pipeline. But the bear case? It's all about what we don't know. No formal guidance for 2026, tougher comps coming up, that little alcohol segment still dragging, and just general worries about the economy.
All right, so for our final segment, let's talk about a potential idea, a little something for the investment committee, based on everything we've just discussed. So the question is, how do you play this? You've got a strong floor under the stock, thanks to the great fundamentals, but you've also got this potential cap on the price because of the lack of guidance. It's kind of stuck in a range. Okay, so here's the pitch. Sell the volatility. The basic idea is that the fundamentals create a solid floor, maybe around $65, while the lack of guidance puts a lid on the upside for now. So the trade could be to sell some cash-secured puts below where the stock is trading today. Now, one of two things happens.
Either the stock stays above your strike price and you just get to keep the premium as income, nice, or if the stock does dip, you get to buy the shares at a discount to today's price. And the big thing to watch for is their Investor Day on December 2nd. That's when we might finally get the clarity everyone's waiting for.
So there you have it. That's our breakdown of Monster's quarter. It's a really fascinating story of a company doing everything right but running into a market that just demands a crystal clear roadmap for the future. And as always, remember, this is not financial advice.